We're going to wait about just 30 more seconds to see if anyone else joins, and then we'll get started. Depending on where you're joining from, good afternoon and good morning. Uh, Welcome to Team DWC's discussion on paying people the right way. Uh, if you have a team, if you pay salary, if you get federal grants, those are all great reasons to be here today. Myself, and you'll meet Scott Moore in a moment, we did this presentation twice in November, and with things coming to the year end and people thinking about potentially bonuses or incentive pay, we wanted to do it one more time for those that couldn't join us before. As I mentioned, we're part of Team DWC. This consulting group started in 2020 by Dave Wickstrom. He is a former Fed, as is Scott and myself. We're a lot of former Feds with a lot of experience in grants management and program delivery. And we want to bring our expertise into the community to support grantees in new and exciting ways. DWC has worked with hundreds of organizations, including nonprofits, state and local governments, and federal agencies. And collectively, we trained over 15,000 participants across over 850 sessions. More recently, we've had the opportunity to successfully support the manage of more than $10 billion in grant funding. I myself, Aaron Taylor, joined DWC this summer after leaving U.S. Health and Human Services, the Administration for Community Living. There, I was a supervisor grant manager, primarily focused on financial compliance review for disability-focused programs. I've worked at 5 different agencies during my time in the federal government, including HUD, SBA, USDA, NIH, and then ACL. And I spent a long time working as an audit liaison officer, overseeing the resolution of 100 OIG audits and more than $5 billion in question costs. I'm going to go ahead and hand it over to Scott, who is going to be your expert here today, leading us through the material, and I'll join you all at the end of the call.
Thank you, Aaron, and good morning to most of the country. Good afternoon for the folks here on the East Coast. I'm Scott Moore. I also left the federal government this summer after almost 23 years of federal service, all in the grants community. I started out, we'll just hit the couple of relevant pieces of my background. I started out my career in the Inspector General's office as an investigative scientist at the National Science Foundation. For 13 years, I looked at everything that could go wrong with a federal grant. And I can tell you that the salary line in the budgets was often a place that things did go wrong. So that will be particularly relevant today. After 13 years, I moved over to the Health and Human Services, landing in the Office of the Assistant Secretary for Health, and ultimately became the Chief Grants Management Officer for all of the high-profile programs that Congress liked to take a look at, things like the Family Planning Program, the Teen Pregnancy Prevention Program, and the Office of Minority Health. So I'm used to being in programs that have a lot, and really a lot of scrutiny from the Hill, from the IG world, and from just about every direction that it could possibly come from. As the Chief Grants Management Officer, I was the deciding official when it came to allowability of costs. And I can again tell you one of the most frequent questions that I got, particularly at this time of year, had to do with salaries and bonuses. So we'll cover a little bit of both as we go through this. But we'll start out with just the basics of compensation under a grant. Well, federal grants come with rules attached. It's not just free money. There are strings attached to it. And those strings come to us from statutes. Congress gives us those strings. We, as feds and the implementing agencies, we didn't make those things up. Those came to us from Congress. And it would come to us through the authorizing statute, the statute that set up our programs that we were administering, and also through the annual appropriation statute. There are multiple statutes that create the funding environment through which you get support. Statutes are that's what we call the law. It is hard and fast. And in the federal agency, we did not have the option to decide which laws we were going to follow and which ones we weren't. We implemented those laws as feds through something called regulations, which would appear in the Code of Federal Regulations, CFR. In particular, with grants, we have the Uniform Guidance to CFR Part 200. And of particular importance today is going to be the cost principles located in Subpart E of 2 CFR Part 200. We just refer to it as the Uniform Guidance. You'll hear me sometimes call it the UAR, the Uniform Administrative Requirements. It's the old term for it. Been around for a while. It's hard to teach this new dog some new tricks, this old dog some new tricks sometimes. But I'll do my best to get the terminology straight. And then finally, most directly applicable to your award are going to be the terms and conditions that you're going to find in your notice of award, your NOAA, the document that formally gives you access to the funds to conduct the projects that you propose to do that have been approved with an approved budget. So that's the relative hierarchy of all of those things. Statutes are the strongest. The regulation is next, and then the individual terms and conditions that will apply to your individual award. We're going to kind of start in the middle because really it's the regulations where we get the most meat and definition to the general rules for how the grants are going to operate, particularly in the cost principles. Employee compensation is directly addressed into CFR 200 at section 430. Employee compensation is allowable to the extent that the total compensation for an individual employee is reasonable for the services rendered and conforms to the established written policy, and that policy needs to be consistently applied to both federal and non-federal activities. So we want folks to get paid for the work that they put into the project. We want them to be compensated. We expect them to be compensated, but it needs to be reasonable. So we look at things like, or would look at things like, what's the prevailing wage in for similar positions in the community, in the locality, those kinds of things. So it needs to be reasonable. For the services, there must be services. They must be doing something to warrant the compensation. And it needs to all be consistent with your written policy. And that's the key. It's your written policy. You need to have a pre-existing written policy, and you need to apply it consistently to both your federal and non-federal funded employees. We don't create special classes of employees just because some are working on the grant and some aren't. We really would, as former feds in our old role, look to make sure that things are being applied consistently across the employees. The other thing that needs to be there is, and this is a little bit of government speak in the reg. Unfortunately, some of those things still slip through. But the compensation needs to be an individual who's been appointed and appointed in accordance with applicable laws, rules, and written policies. Again, that policy piece is coming in. An appointment basically means you've hired them. Appointment is more government speak. When we held our government jobs, we were appointed to our positions. So it needs to actually be a bona fide employee to get employee compensation. If it's not a bona fide employee, but it's a 1099 subcontractor or a consultant, there are other line items that can fall under and other ways that we handle that compensation. And again, the final piece, as always, with anything having to do with money and expenditures under your grants, it needs to be documented appropriately. And in particular, for employee compensation, there is an entire section 430G. So it's a subsection under 430 that addresses how to document what we call time and effort, or documents basically the basis for the compensation. Now, one of the things that I'll go ahead and point out, and you'll hear me say it several times, is costs, including employee compensation, must be allocated across your federal and non-federal funding sources in proportion to the effort allocable to each source. If you have an employee who's working 100% on one grant project, then you can charge 100% of their time and effort to that grant. But if they're working across multiple projects, if 50% of the time is on project one, 20% is on project two, and 30% is on project three, then you need to allocate their salary according to those percentages and be able to document it to be compliant with the regulation. So, and that documentation, really the heart of it is going to be time and effort reporting, or T&E. It must support that distribution across the multiple funding sources. So we really want, only the grant to be charged for the work related to that project. One of the things that we would often see that would come up in investigations or when questions would cross my desk is that sometimes an employee's effort would total up to be more than 100% if you looked at how it was broken across multiple grants. So again, it's an employee only has 100% of their time, so it needs to be broken up, and you can't have 50% to grant one, 50% to grant two, and 50% to grant three. That would give you 150%. That's not feasible. And it's just not realistic. There is a best practice in time and effort. It is a best practice that the employee track their time, and just like a time card or just a time report or timekeeping report, is that the employee certify that to you or to management, to their supervisor, that yes, in fact, they certify that they have put X number of hours into different activities. After that, it is definitely a best practice to have the supervisor review that and confirm that. And the way that we like to see that documented is to have the supervisor certify that as well. So you have two certifications. Now, the magic of certifications, at least from the federal side of things, we liked certifications on that side, because if somebody falsely certified something, we had a means and a mechanism through the law to take legal action. Falsely certifying is lying. Lying to get federal funds is a crime. So those certifications are in there as sort of a check and a balance and a tool to ensure that action can be taken if somebody is not being truthful or not operating with integrity. The last piece of the best practices that we're going to mention is that the time and effort reporting needs to be reasonably contemporaneous with the work that's performed. Weekly, are you doing these time certifications weekly, bi-weekly, monthly, or quarterly? With it in mind that the farther you are away from the time you actually did the activity to the time when you certify it, the quality of that information is most likely going to diminish. I can barely remember what I had for breakfast this morning. So even for me, I keep a running tally of what I'm working on every day, assigned to the projects that I'm working on. That's just for me. When I was an investigator, when I was looking at audits, weekly or bi-weekly were sort of the standard type time and effort reporting. Monthly was pretty common. Quarterly, we did see it. It was effective in some circumstances, maybe when somebody's only working on one grant project, those kinds of things. In my experience, though, anything after quarterly, and I have seen organizations use annual time and effort certifications, they don't carry a whole lot of weight, and they create a lot of skeptical questions on the part of the auditors and a part of the investigators when things go wrong. So we suggest, and I personally highly recommend, that weekly, bi-weekly, or monthly is what you target for. All right, so as a general rule, the federal government won't tell you what you have to pay somebody. that's an employment arrangement between you and your employees. Again, the only factor that really comes in there is reasonableness. Is it consistent with other elements or other similar positions in your locality, in your business, in your subject matter area? However, each and every year in the Federal Appropriations Act that allocates funds to the federal agencies, there is a statutory limitation placed on grants, and it affects it's a limitation on executive salary, although it's not. It's really based on amount, not position or position title. What this comes down to is it's usually phrased as award funds must not be used to pay the salary of an individual at a rate in excess of something called the Federal Executive Pay Schedule, Executive Level 2. I included the link to the Office of Personnel Management site that has this amount listed. It's actually kind of funny. It's a Word document that gets updated every year. It's got about 6 lines on it, and that's about it. But it's there. It gets updated each and every appropriation cycle. For FY 2025, the cap was $225,700. So no individual receiving grant funds can be paid more than that level during the course of the year from the grant. So there's a cap. And we're going to talk about how you may have an executive or somebody on your team who actually has an annual salary that's above that level, and how do we prorate that? Because this cap is actually prorated based on level of effort across the year. And we'll walk through a calculation or two on that just to make sure. But it's important to know that this amount reflects an individual's base salary, and it doesn't include fringe benefits like health insurance, retirement contributions, FICA, unemployment insurance, and paid leave. Just a reminder, incentive payments like bonuses are not part of fringe. Incentives are part of base salary. They're included in, or they're part of the direct cost, which lumps them into base salary. Income that an individual receives that is outside of their duties to your organization doesn't count toward this cap. So if they have a side gig or two, they're generating money on eBay or whatever folks are doing now, that doesn't count toward meeting that salary cap. So folks acting outside of your organization, doing whatever side jobs or side gig that they have, that doesn't add into the statutory limitation calculation. All right, so let's look and see how this actually plays out. If hopefully, when you're reading a notice of funding opportunity from an agency, the NOFOs, they have a table something like this. It is considered a best practice. We always made sure we had it in the NOFOs that I put out for my agency. I do know that not everybody at HHS, Health and Human Services, does that, and I haven't seen it standard across other federal agencies as well. But we found this very, very helpful, and actually had very few issues with the statutory limitation based on just the use of this table and example calculation. So let's just go with the first row. Assume you have an individual whose actual base full-time salary is $350,000. And I know in the grants community, everybody's like, oh, wow, we wish we had that. But for an example, for a hypothetical, the individual has a base full-time salary of $350,000. 50% of their time is devoted to the project. That's a half FTE, full-time equivalent. So their direct salary chargeable to the grant is going to be based on the proportion of their effort, which is going to be half of $350,000 or $175,000. Let's assume for easy math purposes that the fringe is 25% of that salary, which brings it up to the fringe 43,750 for a total salary of 218 750. It's great. That's under the salary cap. Or it looks like it's under the salary cap based on the total, but it's not under the salary cap when you consider the proportion of time devoted to the project. So really what the calculation should be is the second line. You adjust the individual's base full-time salary for purposes of the calculation of what's chargeable to the grant to the executive level 2, which is 225,700. 50% of that time, 50% of their time allocated to the project means that their direct salary allocable to the grant is going to be 112,850. The fringe is going to be less, of course, in this case, 28 to 1250. That again, same fringe rate, but it's applied to the lower direct salary for a total amount allowed of 141,062.50. And you can see that's a big difference between the 218,750 above and the 141. So it's only the 141 that would be allowable and allocable to your grant in that particular case, if you had an individual with a base salary of 350,000. A little complicated. The scenarios can get a little wild. So it's always good to phone a friend, reach out to somebody on our team or somebody who's had some experience with this. But when in doubt, you can just plug and chug based on the table and get pretty close. Now, that salary cap should be annotated and explicitly stated in your notice of award, in your award terms and conditions. Should be, but it possibly isn't. I've seen multiple award terms and conditions that do not include it. Just note that even if the notice of award does not specifically state the salary cap, it still applies because it's a matter of statute. Remember, law trumps reg, which trumps your terms and conditions. So the higher level of authority is always going to win. That's going to be your statute. And by drawing funds for your award, you've agreed to abide by all relevant statutes, regulations, and policies. So you've already agreed to accept and live up to the requirements of that statute. Now, most of you, or many of you, are at nonprofit organizations. The section on employee compensation has a direct section that addresses nonprofit organizations. It basically is reiterating a lot of what we've already said, but it's just putting it in the nonprofit context. But as an organization, you need to make a determination that the compensation is reasonable for the actual personal services rendered. You're not distributing money across the board. Compensation may include, and in this particular context today, we're looking at incentive awards, offsite or incentive pay, location and allowances, hardship pay, those kinds of things that are above the base, essentially, or have been added to the base to provide some sort of incentive to folks who are going to be doing the work. There is a section in the uniform guidance that is specifically addressing incentive compensation or incentive pay. And it is allowable under certain circumstances for employees who are working on the grant. You need to have a pre-existing policy for your organization. That's the first step in considering whether or not you can pay incentives. If you don't have that policy, it's going to be very, very difficult to justify it. As we mentioned before, incentive pay is not included in fringe, it is a form of salary subject to the same allowability tests as other direct compensation. So it goes up in the direct cost line for salary. And it includes things like performance awards. So if somebody has a good performance review, you're going to give them a bonus. That's incentive pay. Differential pay is going to often fall into this category. That is, pay for working third shift because you have, if you need to offer an incentive to get people to work the odd hours, or hazard pay, or those kinds of things, that's going to fall into the differential pay category. Retention bonuses. Retention bonuses can also fall into incentive compensation. Again, for all of these, you need a pre-existing policy that is going to address them, define them, and you're going to need to ensure that you are applying that policy across your federal and non-federally funded staff consistently. This is just reiterating a little bit directly from the reg, but incentive compensation to employees is allowable based on cost reduction, efficient performance, suggestion awards, or safety awards. All of those are allowable. So it's not just performance, but maybe you have a contest for identifying areas to improve efficiency, or a suggestion box that comes with a reward, those kinds of things. But it's allowable to the extent that the overall compensation is determined to be reasonable. So reasonable means somebody looking in from the outside is not going to scratch their head and wonder how you got that number. And it needs to, again, the way the reg phrases this is it needs to be part of your agreement with your employee in good faith before services were rendered or according to an established plan followed by your organization consistently. So again, it goes back to, this is just an indirect way of saying you need a written policy. You need it in place before this comes up. It can't just be an ad hoc, hey, I like this person, I'm going to give them some extra money. You need to apply this consistently. So again, reasonable, pre-existing policy, applied consistency. That's where what you're aiming for to be able to do this. Just like anything, any cost you're going to charge to your grant, they need to be reasonable, they need to be necessary, and you need to be able to justify that. I can tell you as a former grants management officer, if somebody came into me and said, hey, we'd like to pay bonuses because we have all this leftover money, I can tell you now, having unspent funds is not a justification for incentive pay. I would have flat out denied it and probably not considered any other attempt to try to come back and get it, because you've already told me we have leftover money and we're looking for a way to spend it down rather than let it go back to the federal government. Your incentive pay must be allocable to the award. If an employee is paid by multiple sources, understand that the incentive pay needs to be allocated proportionally among the different sources benefited. So if you want to pay the incentive out of one of the 3 awards that your employee is working on, you either need to justify the reason for that incentive is strictly related to the one award, or you're going to have to allocate it across the awards that you can justify. So it is proportional. Award funds are based on supporting the project that is funded. So you need to connect to that project. And again, as always, your pay has to be in accord with pre-existing policy that's applied consistently. Oftentimes what we'll see in policies, the policies will put some sort of cap or metric or calculation or formula around how incentives are determined. So you would need to stick with those policy constraints. How do we handle incentive pay for employees who are really more administrative and covered as indirect costs? So this is often going to be your administrative support, like your accounting, maybe your legal team, often your executives uh, in your organization who aren't day-to-day hands-on with the project. Um, Remember, incentive pay is a direct cost in most cases. So employees whose compensation is covered under indirect costs should not be receiving incentive pay out of the direct cost category. They should be getting their um, incentives out of your indirect cost pool. Because the reason they're in their indirect cost pool to begin with is because it's difficult to uh, measure or proportion their costs across your multiple grants. So it's just something to keep in mind. Direct cost employees out of direct costs, indirect cost employees out of indirect costs. In small organizations, if you've got somebody who's sort of splitting duties, and some of their 50% of their time is on administrative activities, and that's getting paid out of indirect costs, and 50% is a direct cost. They're doing some more targeted, actual hands-on type work. Again, you proportionately split um, the incentive between the pools of funding that they're coming from or that they're getting paid out of. So incentives also can cause a little bit of a glitch with the statutory salary limitation because the incentive is a direct cost. It's adding to the direct salary. You need to make sure that you are calculating, for instance, that incentive award, adding that into the base salary that you're doing your calculations on. So if we took that individual who was right at the cap, executive level 2, with 50% of their time, if we plugged through the formulas, what we would see is when we did the proportional adjustment to 50% of the proposed incentive award, which here is proposed at 10,000, half of that is 5,000. When we add that in the direct salary, that actually takes the salary above the cap, even proportionately. So you have to watch for that. If you've got anybody who's up near the cap, you may not be able to award the incentive award, at least not out of the grant. You can award it out of your other non-grant, non-federal funds. You can always pay somebody their base salary. It's just that there's a cap on what you can pay out of the grant. Right. So that, again, that's a little bit complex, but it doesn't affect too many folks in the nonprofit world, but it does. We have seen it, or I have seen it a couple times. But that's another one of those. It's always a good idea to be able to phone a friend, ask for a little guidance, just to double check the calculation. And with that, I'm going to hand you back over to Aaron.
Thank you very much, Scott. And I'll say we do have a few questions in the chat. I would encourage any questions you have to go ahead and put them in the chat. We have plenty of time to go through them, and hearing from you all as grantees and leaders of organizations, it was really helpful, right? And we love to learn about the specifics and the challenges that you're having, because particularly when we're in the federal space, it was always kind of interesting and fun to work in the gray area and to really, test the bounds of the uniform guidance and or the statute that you're working under. At Team DWC, we introduced a lot of the challenges that entities have when it comes to making payment or paying salary or doing bonuses or incentives. If you're at an organization that has questions or is working through process improvement or heard some things today and you want to explore those further, we would love to work with you and encourage you to reach out to us. We'll share our contact information, but you can always also go to the Team DWC website We have an expert team that can help expand and deliver updated, efficient, and excellent SOPs. We can do further hands-on training for you or your team. We can get you ready to be audit-proof and to work through any compliance challenges that you might already have, or if you have an upcoming single or financial audit that you're prepping for, help you to understand the process and be ready to go through that good and clean. And we can do targeted technical assistance and work into specific issues with a narrow lens or a broad lens, and really help you to be confident so you can focus on mission delivery and be assured that your administrative and financial systems are in a good place. So we're going to move on to the questions. I see that we have a few in the chat. The first one that came in is, where can we get the information for this? And I was wondering if the individual who put this in could expand on that a little bit, because it came in during the presentation. And I'm not sure if it was specific to a slide or in what context that was delivered. And Scott, I'm not sure if you're getting any more context from that.
I can't remember when the question came in, but for the bulk of everything that we've covered, it's the information itself is going to be in 2 CFR 200 subpart E. That's where almost all of this was extracted from.
And if you're coming from a world of 45 CFR 75, it's still the same subparts of 430, 2 CFR 200, 430 compensation and French benefit 431. They match up pretty darn well. A lot of the same language, just slightly different coding.
Right. Right. And we actually did, and I think the recording is still posted on the transition to the new uniform guidance for HHS. HHS was a year behind the rest of the federal government, but now HHS is operating under 2 CFR 200 as of October 1st, 2025.
Yeah.
Yeah.
And I see you did come back towards the end of the chat. All of our materials are posted on the Team DWC website, as well as recordings of all of our Inside Grant sessions. So feel free to go there and you'll be able to get the materials. And please do, share with colleagues and friends. We are former feds. We are committed to mission and seeing entities be successful. So we want to support you in however we can. So I see Jacinia had a question about any suggestions around kind of defining different types of incentive pay and making sure it's, your policies aren't too narrow, right? But are also specific enough that they're not open to question.
So yeah, this is a great question. And I'm actually going to refer back to the way we did things on the federal side, in-house. There are some different ways to phrase the incentives. We had something called on-the-spot awards, which were up to a certain threshold. I think when I started as a Fed, it was 250. It may be up to 500 now. So if there's a particular, outstanding task or outstanding sort of thing that somebody's done or gone above and beyond, folks would, and this was all baked into our policies. So we had a lot of written policies on these things that sort of set the boundaries. So long as a manager could justify in writing that, hey, this person did this great thing, I want to give an on-the-spot award, and they didn't exceed the cap, which for us, let's just say it was $500, you could do that. It was sort of a random, you don't want to call it a random bonus, but it was something that was unique, time specific. You want to do it at the time that it happens. So that would be a way to work that into your policy. And you hit exactly in your question what the key is. It needs to be written into the policy ahead of time. And it needs to meet the reasonableness standard. There may be, we had other sort of a larger pool of, not just a one-time thing, but it was sort of a big project maybe, that you want to give somebody or a team a bonus for or an incentive payment for. Again, put some parameters around it. How is that going to be determined? What is it they need to do? How does the manager need to document it? And you can call it that versus something like a holiday bonus. Um, Holiday bonus is just something, how is it going to be divvied up among folks that work at different levels, different salary grades, those kinds of things. So the holiday bonuses are actually a little trickier to justify than performance-based awards. Performance-based awards are usually um, a little bit easier. When it comes to salary increases versus incentive pay, somebody's getting a raise. Again, that all needs to be worked into your policy and procedures. And you would need to sort of account for that um, in your proposal budgets that, anticipate that somebody may need a bonus, time and service, those kinds of things. It always goes back to your policy. If there are any examples that we could refer to in resources on the Inside Grants website, I don't think we have any resources that we developed yet. Those are all still very much under development, but it's definitely something we will flag to make sure that we're working on.
Yeah, and I'll add that we are looking at more subject specific topics for inside grants going into calendar year 2026. So this is something we can add into the pool and potentially explore further. So the next question, Scott, goes to severance pay and retirement package, and this is a deeper nuance, right, within the
Sure.
uniform guidance. But before turning over to you, I'll just emphasize you need to have a policy. It needs to be done consistently, and generally this kind of pay needs to align with the cost allocation of when the individual was working as far as distributing these expenses. So they are allowable with caveats, right?
Yep. That's the best way of saying it, Aaron, is allowable with caveats. There is a section in.
It's 431, so I just
Yep.
looked it up. Yep.
Yep. So that is in there. It gets a little bit more complicated, but it can be done. Again, it all goes back to reasonable. It does have an impact on your budget, on your proposal budget or approved project budget. So you have to be careful there. If somebody's retiring or leaving and you're bringing on somebody else to replace them, it's going to be up to you to figure out how to balance out those salary needs, because your federal program office isn't always going to have additional money that they can supplement your award for to cover retirement or severance package.
And I will add that 431 does have some nuance, and I just put the reference into the chat about accruing. So if this was crossing fiscal years, or you're trying to project the expense, that encourages you to have a conversation with your federal agency. So if this is something abnormal and new to a grant, go ahead and have a discussion with your grant management specialist or program officer, because there could also be some statutory challenges or limitations that they can help you navigate in line with the uniform guidance. All right, so the next one is from Angela. What about employee tax payments, 941, wage withholding, etc.? I just started, my predecessor didn't pay for 11 months, and now we need to make payments. Can I request funds from a previous year grant to cover this?
Okay.
I'll just say sorry, Angela, right? We'll both, and we've seen this before, and we'll say sorry.
Yeah. There's always something fun about inheriting somebody else's management of an award. So things like employee tax payments, wage withholding, those kinds of things, those should all be coming out. That's part of the direct salary and the fringe line. So all of those things should have already been accounted for in the proposal budget, and the funds should be there. As far as requesting funds from your previous year grant to cover that, if you have funds that were unexpended or unobligated in a previous year of the grant, that is going to be the judgment call of the grants management officer. For those that aren't aware, on the federal side, there are typically two individuals that are responsible for the grant. There's going to be the project officer on the program side doing the programmatic piece, and there's going to be a grants management officer on the financial management side, and that's the signatory on your award. That is the person who has to give those approvals as to whether or not you can carry funds forward from a previous year to pay for current year costs. So I would encourage you to have that conversation with your grants management, your assigned grants management officer. It is possible that they could give you access to those funds, but you would need to provide a justification and an explanation. Speaking as a former grants management officer, don't try to be too narrow in your question that you're asking them. Really give them the facts and give them an opportunity to really evaluate and look for a way to help you make up any difference if you don't have access in your current budget year to pay your obligations.
Yeah, I would just add in transparency is king in this situation, because if your grant management officer finds out that you have penalties or debts or liens not through you, then it's going to be a lot harder to get flexibility on budget and flexibility on draws. And I will give you the reminder, if you have accrued penalties because of delayed payments on any of these, those are not going to be permissible expenses on your award. Denise, you've asked the platinum question of, are there sample policies available? I would say that's something would be an offline conversation and talk to you. Scott and I will tell you, as former feds, we don't give out policy templates, and policies are so unique to the size and complexity of an organization that it really takes more of a deeper dive to understand who you are as an entity, how you've grown into that entity, and what kind of methods and controls and checks and balances fit best with you. And I'll let Scott, you jump in. I mean, I feel like we bounce each off pretty well, right? Because we've lived a lot of the same experiences.
Yeah, I mean, ask around some of the other grantees that may be in your cohorts, those kinds of things. See what other folks are doing in the community. There are grants management associations out there that may have some policies available as well. As a former Fed, I can tell you, when we were reviewing policies during evaluations or audits and those kinds of things, we were often our reference point was always what we were doing on the federal side, and the federal policies on compensation are available on the web, so you can kind of see the way feds think about it. And it doesn't mean it will be a good fit for your organization. It doesn't mean that you need all the complexity that we had when we were on the federal side, but it can give you an idea of how we thought about things. You maybe don't need all the bells and whistles. It's sometimes simpler is better. Really, it's just making sure that you and your employees are all sort of on the same page as to what to expect. And things, again, it's reasonable. It's basically doing your reasonableness justification before you get to the point of deciding to give an incentive award. So.
Right. And we have a question from Scott about a longtime or founding executive director and wanting to, give recognition and potentially compensation at retirement, understanding that the employee was not making retirement contributions or didn't have a formal plan in place. And I would say that is a very noble thing to do. If you did not have policies in place to fund this type of award through your federal grants and in play prior to this event happening, it's a high risk of using federal funds to compensate, or to provide awards, to this individual. So we encourage you to think more broadly if you have a broader set of funds. And we'd also caution you from implementing any last minute updates to policies to make this happen for an individual, because you write policies for an organization.
I think if this were coming across my desk as a GMO to evaluate, I think I would have a lot of questions related to how was that executive director's salary being paid? Was this an executive director who is a direct cost line item, or was this an executive director who was getting a piece being paid off of indirect costs? And that would sort of help determine that first step of which funds are we talking about, if we're able to go forward. Aaron hit it right on the head. It's like, what is your policy? What has your policy been? Not what is your policy going to change to accommodate this type of request? Again, the preference with compensation under a federal grant is, this is taxpayer dollars that's being used. What is the benefit that taxpayers are getting out of that payment, that compensation? So it really, it's severance, retirement packages, those kinds of things, particularly if there's not been a contribution during their employment. Again, it's going to be a really big uphill climb to sort of be able to justify that and get the auditors to buy into it. So
Perfect. So Denise asked a question about COLAs, and I wanted to jump into this intentionally because this is an important piece of retention, right? And awarding the hard work of your employees, but also staying in line with things getting more expensive and inflation. And we know in talking to nonprofits, right, this is an important retention mechanism because oftentimes people are working at a level that's mission driven as opposed to financial incentive, right? Doing it for the money. And this is something too, when I was at HUD, that was, common in the tribal communities as well. You get a lot of turnover in tribal organizations and nonprofits. So having policies in place, and again, coming back 100% all the time, this is where the uniform guidance is specific, that it needs to be in policy and practice with the organization. But this is also where you get your huge amount of flexibility, because there is not a one size fits all solution. If you write policies and they establish that they're reasonable for your industry and your geography, that they're in line with the statute, and that you are allocating in a fair and reasonable way, then yes, you can have COLAs, right? Yes, you can implement appropriate salary and reasonable salary for your employees, all with the caveat, as long as you have enough funding to do that, right? And the biggest thing that's going to run down to organizations is managing their budgets and creating appropriate capacity to implement your programs. The short and sweet answer is yes, you can have COLAs, have an intentional policy and process in place to review appropriate compensation increases for your organization, and ensure that there's appropriate internal controls, that the executive director and/or the board are overseeing this as part of the budget process to ensure that everything stays above board. How to do, Scott? I'm always learning from you, so I'm trying to.
So yeah, I mean, it's again, it all goes back to what's your policy and is it reasonable? The only other caveat that I will add is that currently, and we don't have a good feel for how the current administration is looking at, is going on an auditing or reviewing those kinds of things. But the current sense that I have is that there's a preference for performance-based increases versus just an automatic. So COLA sort of comes with a perception that everybody gets it and it's an automatic increase. There are circumstances where that is justifiable. You just want to be careful in how you're supporting and justifying that. But a reasonable COLA should not have any problem passing an audit. I just flag it now as one of those things that you may have to defend at some point. at least for the time being.
And Scott, Eileen came back with a follow-up question here about nonprofits and particularly using their general or unrestricted funds
Right.
and if those can be used for severance or incentive and how it's subject to max pay.
Okay.
I will say something real quick and pass it over to you. And when it comes to max pay, incentives, and severance, all of this, we're talking about having policies in place for how you treat, federal funds, ensuring that you have policies in place if you're using federal funds for severance or incentives, that it's in place, locked down, and consistent before you're implementing that. With max pay applies to if an individual is getting salary from the federal grant as a direct cost, then they can't get the equivalent, right? A proportionate amount in excess of max pay. If their salary is above that, that's fine. Then you have to use a calculation to balance that out. And that's where unrestricted funds could be used to compensate someone more. But understanding your caps and use of federal funds is an important piece and important internal control that needs to be implemented into policy. And I think, Scott, you might be able to package this a little bit cleaner, but your example in the slides did a good job of saying this is where the cap stops and how you treat someone who might get more in total compensation.
Yeah. So, and this question is a good cue for me to learn how to phrase it a little bit better as well. I still speak a little bit Fed and not quite non-Fed yet. So on the federal side, we would refer to it as the salary cap. It's really not a salary cap. It's a cap on the allowable cost that can be charged to the award. So if you have unrestricted savings, if you have other funds, your agreement between you, your organization, and your employee for what their compensation is, that is your agreement, so long as it's consistent with your policy. So if you have somebody who's getting paid in excess of that, I'm going to call it the salary cap again, that's fine. You can still pay them that 350,000 that we had in the example. It's just the amount that you can pay with the grant can't exceed that prorated salary cap, as it were, for what the federal share can be of their salary. So if you have other funds to make up that difference, good for you, good for the employee who's going to be getting that difference. But yeah, anything that you have that's non-Fed can be used to supplement, as we might call it, the salary.
Yeah. And Eileen, I'll say in practice, this kind of scaling of salary and splitting, the two compensation methods is pretty common in sponsored programs offices for well-tenured principal investigators at universities, that they will use this type of approach where they'll max out the compensation scale to the cap, and then any pay, they have a separate compensation, strategy for that's non-grant funded or unrestricted funds. And that's the individual's total compensation package, right? Which is unique to them and the employer. But we're here, looking at how you comply with the regulations to ensure good practice on federal grant funds. One other thing, I wanted to mention real quick, as we're here, we talked about direct and indirect cost, and particularly funding of individuals through indirect cost. One big piece that we probably all heard about last year was a change in the indirect cost policy and cap for universities that came out through NIH. And as Scott was talking about in this administration and looking ahead to some of that, this is probably a good discussion to have within your organization about cost allocation strategies and being mindful of how you are using indirect and direct cost, knowing that one of the biggest communities in HHS, NIH, was given a curveball when it came to indirect cost. So this is encouragement as you go into calendar year 2026 with all of these changes, particularly the updates into CFR 200 and the new precedents that are being set, to be mindful of your policies and procedures and make sure that they're update and they fit your organization and that you have appropriate internal controls in place for the management and system of your organization. I see that we have one more question from Denise. Instead of a raise, could you give performance awards due to possible cuts and sustainability of a raise?
So that is an option if your policy allows for performance awards. I can tell you as we as former feds, there were years that we did go without raises. There were years that we went without cost of living adjustments, those kinds of things. But we were still able to receive performance awards. So again, it all goes to your policy and what your policy allows you to do.
And you can always write your policy big, right, to give yourself a big toolkit of options, but it's ultimately going to come down to your budget and your available funds to implement those mechanisms, because a COLA or an end of year performance award might be off the table. So then you might have to look at other in-kind ways that you can award performance and raise morale because your award went down, or your award doesn't stretch as far now because things are more expensive. So I would encourage you just to think more broadly about how you recognize good work and how you compensate, so you have more options in your toolkit. We've had by far the best questions here, the Q&A, and sometimes, particularly in the Fed space, like you get a lot of indigestion about this part of it, but I've really enjoyed it and want to say a big thank you for everyone for such a robust conversation and for joining us today. Not seeing any other questions, we will go ahead and let you go. Again, we encourage you to reach out to us. We love engaging in these conversations, and you all had so many great thoughts and feedback. I hope everyone has a wonderful afternoon. Happy holidays, Merry Christmas, all of the good things, and maybe it'll be a white Christmas for someone. So thank you very much.
Thank you.